There he is. I've seen this guy on the internet before.
Hello, my friend.
What up, sir?
Okay, Raoul, is the banana still in the zone?
People are so impatient. They think banana needs to be immediate and needs to be in their precise bags, and that's the issue. We're at that point in the cycle where, over time, the liquidity has to come to roll the debt, and as that comes, prices go exponential. And it won't be for everything. Obviously, there's too many tokens now. I don't know how many tokens there are. There's like a million of the things.
3 trillion, I think, is my reference.
Yeah. So generally speaking, it's going to be. I think the cycle got extended. It got extended because they increased the maturity of the US government debt from 4 years to 5 years, and that pushed the cycle out longer. And so that's why the business cycle has been subdued. Like Main Street's not participating, but Wall Street has. And the moment that kind of changes, which all of our forward-looking indicators suggest, feels like bananas should be on the menu.
I think one of the interesting things, at least about my experience in this market, is that we all have to become macro aware in a way that maybe we didn't before. And I think what I've appreciated most about, our conversations over the years, and definitely the content you put out, is that you have a very big focus on that, trying to sort of contextualize everything, zooming out of the timeline into the bigger picture. And it's been a crazy couple months, frankly, around that. I'm wondering if you can maybe help anchor us in what's the right way to think of the macro environment today? What should we be looking at?
It's a somewhat unusual environment. So the main driver of crypto prices, NASDAQ, everything is global liquidity. It's like the amount of money central banks create in the system, whether it's through the banking system itself or whether it's through other mechanisms like the QE or things like the Treasury General Account. So that is the liquidity. That explains 90% of all Bitcoin's price action, which is fascinating. The outperformance of alts versus Bitcoin is driven by the business cycle, the ISM survey. Once that goes above 50, people have more money. They start speculating, going further out the risk curve. So everything had been following the money, global M2 and global liquidity up until about July. Well, what happened in July was, firstly, the tariff thing started kind of kicking in and people were starting to get confused. But then what really happened is the Treasury began to build the Treasury General Account ahead of a government shutdown. So what that is, when they build it, they're basically not spending money out of their bank account. So it's less money going into the economy. And normally that's offset by what's called the reverse repo market that had been already drained. So there was no other liquidity to add because they were also doing quantitative tightening, i.e. taking money out of the system as well. So we had this double tightening going on. Okay, that was going to be a short period of time when they rebuilt the TGA and then the government shut down. So now they can't even spend the money that's in there. There's like $1 trillion in the government account and they can't spend it because all the workers have been furloughed. So that means that money doesn't go into the economy. The reverse repo is drained, so there's no other offset, and they had quantitative tightening. So suddenly liquidity starts seizing up in the system and we start getting weird things going on. And so the Fed immediately said, we're going to stop QT. So that was at the margin, we're going to add liquidity. And then they've even recently today saying, you know what, we're going to have to expand the balance sheet to give the banks more reserves. So they're using the banks to increase the liquidity in the system. So now we're stuck still with them having a record amount of money that they need to spend. They need to spend $250 billion in 3 weeks or a month to pay everybody for their back pay. So that's all going to flood back into the system the moment the government reopens. And when it reopens, that's when liquidity comes back. They drain the TGA over time, but now they have a new liquidity measure, which is the ability to increase the balance sheet. And then the multiplier from the banks goes through.
Interesting. I tongue-in-cheek tweeted the other day, maybe they should just turn the government back on. But sounds like you're making the argument here where that is actually a big and important thing to go do for the markets.
Yeah, it's quite funny because that libertarians say, well, I've not seen any difference with no government. Yeah, you have, because numbers gone down. We've all got poorer because liquidity has been drained out of the system. But they're structurally going to change this next year as well. They're implementing something called the SLR, the Strategic Lending Requirement, which allows them to allow the banks to keep more reserves, which means they'll buy more government bonds and allows them to lend more money. So they're trying to solve this problem over the longer term. So that's another mechanism by which we'll add liquidity next year that we didn't have this year. We really had a broken system this year because we only had the government which draws down its bank account and then builds it back up again. So it keeps going in cycles. We've always noticed this. We're like, why can't we have nice things? When the market gets to the high, it ends up coming back down again. It's because of this mechanism. But that should now be replaced going forwards.
How quickly do we see risk assets responding to more liquidity in the system? Like, is this can we be excited about December, or is this a 2026 thing?
No, generally speaking, the market will front run this. So we're still trying to decide when the government's going to reopen. My best guess is we will have full clarity by the end of next week. Now, whether they agree something soon, but the probabilities, the market will start finding traction. And then as it comes, it'll then start accelerating from it.
So you think we're going to hold 100K?
Yeah, and I think we will end the year a lot higher. Don't forget, last year, we didn't start rallying until November 7th. And then we did 64% from then. So, nobody believes we can have
This is
nice
what we
things.
needed. This is what we needed.
No, I knew we were going to get this from him, Josh. I knew. This is end the week, and a positive note here. I mean, I'm looking at the poly market right now, and it looks like smart money is on. That's not happening next week. It's sort of 57% is after November 16th. But I do think we have. I mean, the airlines are being disruptive.
That's
or at least
right.
That's the threat, and I feel like those are this is the thing. Like the things that we need to go like triangulate to try to make a sense of where this world is going is just like expanding crazily.
Once you see that there's only one dominant factor, it actually is easier because then you can strip out all of the noise, all the stuff people tell you about. It's tariffs, it's this, it's geopolitics. It's none of it. It's all one factor, 90% of it.
Where does your conviction in that? Because I think there is others who would say that statement is incorrect, right? That you're missing a lot from it.
Yeah. So we produced a body of work over the last 3 or 4 years called the Everything Code, where we discovered that basically the entire system was about the rolling of debts. And so this body of work is, I don't know, if I were to lay it out, it's probably 300 or 400 pages and maybe 1,000 charts that we have in a database to show all of this. It's actually all come from demographics. It's a really big picture, and it zooms down to, you can get it down to, the next few months. And so we've definitely done more work at Global Macro Investor in this kind of nexus of macro and crypto than anybody else in the world. And it has played out really well over time. And I think it will continue to play out. Obviously, nothing is perfect. There's always wiggles. There's always things that change, like the shutdown is now the longest shutdown ever. You don't expect that. But when it comes, you kind of know what it's about and why it's stalling things. And again, to go back to the hopium zone, which is the most important part for all of us on a Friday, if I look at last year, from November, Bitcoin rallied 62%, ETH 74%, Sol 74%, SUI 235%. The previous year, we had the same factor. All year, we did nothing, exploded at the end of the year. Bitcoin 37%, ETH 40%, Solana 305, SUI 128. So we're 7th of November. This is where it started last time. Who knows? But, from here, we should be significantly higher.
I'm interested in where you think we are in your exponential age thesis. I don't know exactly when you laid it out. I feel like it's been out for a while. Maybe can you just give us a quick TLDR for people who don't know what that is? And then curious for you to kind of talk about where you think we are in it.
Yeah, so the exponential age thesis plays into all of this, right? The answer to this mess of demographics where global growth keeps falling because we've got aging populations, productivity goes down because old people are less productive, and debt growth is the other driver, and we reached that peak 2008. So how are we going to solve this? We're going to solve this by changing that population number by the robots and the AI. So that is coming, but that's only just started. So we've still got this everything code cycle to continue to play out, which is we have to refinance these debts because the debts are too big versus trend rate of GDP growth, i.e. there's not enough taxes to pay for it. So what they do is debase the currency to kind of make it go away. And they're doing that until the robots and the AI kick in. And we've heard that from Scott Bessent, we've heard it from Donald Trump, we've heard it from Elon Musk. Is like productivity has to pick up, and that's what it's going to come from. So that happens. My guess is we start to get a bizarre world where this starts to really affect economics by about 2030, 2032. Suddenly we'll see GDP growth accelerating, but unemployment might rise. We'll see AI agents as better investors than us. What does it mean for financial markets for us? We get to a point that I call the economic singularity, where kind of the whole economic system as we know it breaks, and we have to develop a new one because somehow we need to tax the robots and the AI. How the hell do you do that? You know, people talk about universal basic income, but we need to solve who do we tax? Where do we get that money from? All of these issues. And then how do we deal with the fact, and this is the bigger thing, is people don't really realize is we're arguing over, do we have AGI or not? Artificial generalized intelligence. We currently have AI that is as smart as a PhD in every subject known to humanity. Right, so this is a polymath that's smarter than anybody on Earth. The next phase, because the intelligence of these models keeps like doubling every year, is we go from an IQ of like 150 to an IQ of 300. We have now replaced ourselves with the apex intelligence. The history of humanity, we have always been apex intelligence. And I have a thesis behind all of this that the fundamental purpose of the universe is essentially to convert units of energy into units of intelligence. And that's the whole evolutionary process. And what we've just created is a new superintelligence. And so we're not the apex creatures. So what does that mean for economies? What does it mean for us? What does it mean for our role in it? I'm not a doomer. I don't think this is the end. I think we just do things differently, which is about being human. What can we do that the AI can't? We're humans. What do
This
we
is
like?
why I say please and thank you every time I ask ChatGPT to do something for me, because I want the data set that it has out there just to think very kindly of me. This is my alignment protectionism here. I'm curious, have you read the book Accelerando by any chance? Are you a sci-fi guy at all?
No.
Okay, highly recommended just because of I think I remember being early university and speaking to a guy who was at that time using AI to design chips for Qualcomm, et cetera. And I said, how do you sort of stay ahead of the future? And he's like, science fiction, baby, science fiction. And so I've always had a love for that. And Accelerando is a book written 20 plus years ago that feels like it could have been written today talking about tomorrow. And so it's a very interesting one for folks listening. Highly recommend it. It is
there's a thesis around all of this which is called hyperstition, which is that hyperstition is the manifesting of reality via the stories we tell ourselves. And science fiction has proven this out time and time and time again. Another classic version of hyperstition is, I don't know if you've ever seen the David Bowie film, The Man Who Fell to Earth. It's basically the story of Elon Musk. And the eeriness of that story is extraordinary. And there's hyperstition is everywhere. And there's even now a prediction market based on hyperstition.
Really?
Yeah, it's really interesting.
Huh. I mean, prediction markets are almost just a very literal implementation of hyperstition.
That's right. So, so there's something to that. It's one of the weird powers of the universe is this hyperstition thing.
I'm curious. I think the other big topic that's coming around related to what we talked about here is this idea that AI is in a bubble. You and I are both old enough to have experienced multiple bubbles in the past. There are people saying this time is different. There are people saying, oh no, we are doomed again. I'm curious how you are sort of interpreting where we're at in the build out of AI and the potential implications on financial markets.
Okay, when you go back to the very top level, this is the greatest invention humanity has ever made. And it's maybe the last invention humanity will ever make. It is so important because it leads to ASI, which is the godlike superpower, that the forces behind it are so extraordinary that it cannot be stopped. And no government, the US nor China, can allow that to happen. So whatever anybody thinks about a bubble, will prices go up too much for a bit? Yes. Will it stop? No. Will it accelerate? Yes, it has to, because the game is too big. And so if that is the case, then I know that quote from Sam Altman's CFO about, would they bail them out? No, they wouldn't bail out one, but they would bail out all of them. There's no way. So yes, you can have a bust. Of course, you'll have excess exuberance in share prices and stuff like that. But the reality is the technology is too important for all of humanity to not. So my working hypothesis is we will end this as we go into the economic singularity when we don't even know what financial markets are anymore. What's a company? How does this all work? By the time we get to that, 2030, 2032, that will probably be the biggest bubble we've ever seen, because every single investor is going to throw in the towel to this mega trend because they realize it's backstopped by governments. It's all the cash flows of the largest corporations on earth. It's all of the density of talent all go into one thing. So that bubble is going to be massive, and we haven't even started yet.
I mean, how are you thinking about the right kind of broad exposure to have to each of these categories? If you think about Bitcoin, maybe long tail risk assets, AI stocks, long tail stock market, like where are you placing your bets?
So it's actually not easy to bet on it cleanly outside of NVIDIA, and NVIDIA's dominance, like Bitcoin dominance over time, has to fall. So we need to see other players coming in. So where's the cleanest bet? Crypto's one of them. Why? Because in the interim, we have to debase currency. And also, agents will use crypto rails. So we kind of know where this is going. So that makes it a very easy bet. It's also been the fastest adoption of any technology or financialized technology the world's ever seen, because AI you can't directly invest in so easily. The other thing is I try and think where the world will go. So we can make plenty of money up into that economic singularity, whether it's out of crypto, buying tech stocks, number will go up over time. There will be a period where everything corrects, NASDAQ corrects 30%, but that's kind of noise within the overall trend. But what I'm thinking about is, what about the other side of this? What has value? Now, I think crypto still has value in that because of its use cases and how it evolves. Things like digital ID become more important. That uses blockchain rails. But I also think about the value of digital art. Because in a world where you're competing in financial markets with AGI, you have no chance. So what assets can you hold? Well, you want scarcity. So can it be a house? Yes, but houses have this demographic issues and other issues. We also have the movement out of cities into places. We have remote work, so we can move globally. But when I look at it, digital art is, if we're going to go from a $4 trillion asset class today in crypto to 100 trillion by, let's say, 2032, that's going to create 97 trillion of wealth. Let's halve that because I'm an idiot. So you still create $46 trillion of wealth. We'll have made it in crypto. So digital assets and digital scarcity is something that we all understand. And the culturally relevant marker stones of that are NFTs. So I've been hoarding and buying as many as possible for this thesis, because I know in the future, the world is more digital than today. And these artifacts, the memetics of today, the cultural stories, are going to be incredibly valuable in the future.
We see the guitar and the digital art behind you.
Looks like X copy. I can only see a sliver, but
it's an X copy. Looks like X copy. It's X copy mortal.
Great piece.
But the other way to think about it is, okay, what is the equal and opposite offset of us living in this incredibly digital world where we've got drones delivering our food, our cars drive ourselves? I mean, this is all a future within 3 years, 2 years, with this super intelligence. The equal and opposite offset is nature. Nature trades at a premium. Human experiences, sporting events, live music events, all of these things where humans get together is a thing that humans do. And we know this to be true because no human has beaten a computer at chess in the last 30 years. Yet chess is more popular than it's ever been. It's a multi-billion-dollar industry. Why? I don't know. Humans like seeing humans compete against humans. And it's the same with soccer teams, NFL teams, basketball teams. They're all rocketing up in value. Why? It's a human experience. The machines can't play a part in it. That's really interesting. When you see the signal, why is Taylor Swift's economy $1 billion? Same thing.
Yeah, interesting. All right, man. We're going to let you go here because I think we're at the bottom of the hour. But yeah, I appreciate you hopping on. I've always enjoyed our conversations. I think I love your full-throated takes on the timeline. You're not afraid to kind of put yourself out there in a way. And I think even the digital art takes recently have been fun to watch as they've kind of permeated through various segments of the timeline that I'm involved in, for better and for worse. But yeah, I appreciate you zooming out here with us a little bit. I brought up some of the charts that you had mentioned, looking at global liquidity, growing up and to the right, a little slow off here, but trend is
Trend is clear.
good. And
Trend is
then
clear.
the ISM just hasn't been able to break across 50 for any
No.
sustained period of
And when
time
you
since.
detrend, I think it was on Julian Battel's feed the other day, once you detrend Bitcoin, it's the exact chart, which is why we've had this weird sort of grind higher, but without the real exponential phase, is because the business cycle. And if you just think about it in sensible terms, is if the business cycle picks up, we all have more spending money, and then we invest more and we buy riskier things. And we know when it all ends is when we're all looking at Zillow all day, and then it ends.
I'm just watching the watch charts. To me, that's
That's
been
the
a
other
good
one.
leading
So
indicator.
the watch chart. So we've done the work on the watch charts. It's exactly the same as NFTs, CryptoPunks. It's the same as fine wine, and it's all the ISM survey. It's all
Everything's correlated. No,
all the same thing.
global correlation.
Exactly.
I will appreciate you, man. Yeah, I hope to check in with you again at
Yeah, I
some
have to see
point
you
soon.
in person again soon. I haven't seen you for bloody ages.
I know. Oh, I'm sure it'll be some random bar again in some.
Exactly.
All right, brother. Cheers.
All right, guys. Good to
Thanks so
see
much.
you. Thanks
Peace,
so
man.
much.
Thank
Bye.
you.